I'm here to discuss private equity with BDO partners Andrew Beagley and Daniel Martin. Andrew, what are you seeing in the private equity market domestically currently?
So the year for private equity is, I guess they've been a little bit quieter from their standards, but they are trying to deploy. It's still very active. So if you think about private equity, they are constantly engaging with businesses and forming those long-term relationships to try and execute. In terms of execution, it's still pretty challenging for them. There's been a couple of transactions that we've been involved in with private equity. They haven't deployed as much capital as they would have wanted, but that's probably just due to the macro factors. But it's definitely getting more competitive, as we've talked about previously. There's still a lot of Australian private equity setting up, and the superannuation funds, the Fisher funds, have set up a team and investing in that. So it's getting more and more competitive. Absolutely.
Daniel, it seems like private equity is certainly more active in this market, but why do you think they haven't been as active in deals?
I think the last 2 years have been very operational focused, so they've really been focused on their existing portfolios, trying to work through lower demands, the highest interest rate cycle, so very focused on operational improvements for their investee companies, so that's been their sole focus. And finding new businesses, finding investment opportunities has been challenging and arriving at value.
Now that they've set up shop in New Zealand, is 2026 going to be the year of deploying some PE capital?
Oh, definitely. I think there's a number of processes in place, so I think we should see some announcements soon from PE who have deployed some capital.
Any thoughts for the year ahead?
There's a number sitting on businesses they've sort of owned for a while, and they need to recycle those businesses, recycle their capital. And so, they're just probably waiting for the right conditions to exit. So, hopefully it'll be better conditions for them to exit. So we expect a number to start looking at exiting some of their assets as well. So you've got them hopefully acquiring more businesses, but then there'll be quite a few exiting over the next 2 years.
With KiwiSaver funds now on the private equity mix too, as you mentioned, do you expect there to be more competition for deals that are in the market and for that to potentially drive up valuations of those businesses?
There's definitely more options for buyers. Whether it necessarily means it's going to result in higher values, it's hard to say, but there's definitely more competition out there for money.
Interested to see what happens. Thanks so much.
Thank you.